Hi there, and welcome back to the O.B.S Financial Educational Series-Learn from the Tax Masters. My name is Stacey Bartel. I'm president of O.B.S Financial, and today is Monday, February 25th, 2019. Over the last couple of days, we had discussed going over your pay stubs, taking a look, making sure that what's being deducted, if it's deductible or not. Friday, we discussed your group pensions, group RRSPs, and other retirement tools. So today we're going to kind of finish up with the deductions and talk about some of the more common ones. So let's start off with number one, union dues. If you belong to a union, an association, or any type of bargaining unit, you're probably having union dues deducted off your paychecks. Union dues are used at the end of the year to deduct from your income prior to calculating your taxes. Normally, you'll find the information that you paid for your union dues reported in box 44 of your T4. However, in some cases, normally for those of you that work for trade unions, where you report to the union hall and they send you out for work for the day, week, or months, what you'll find is that your union will send you a letter at the end of the year letting them know how much money you paid for your union dues. The reason for this is you may work for many employers. When that happens, you should always maintain pay stubs from every one of your jobs. Also keep copies of the canceled checks for any union dues you had to pay directly out of pocket for periods that you either weren't working or if the union requires you to do any payments. And then at the end of the year, we need to balance that amount with what the letter is that your union sent or your T4s. Sometimes the amounts are double reported, sometimes they're not reported at all. So this again is another reason why your pay stubs are important, especially the last one from each employer or the last one from the year, because it'll give you year-to-date amounts. After union dues, one of the other common ones are charitable donations. Charitable donations is when your employer, normally through United Way contributions or other plans that they may have or campaigns that they may have, they'll allow you to take money off your paychecks every 2 weeks and it goes directly to the union. When that happens, charitable donation receipts are not issued to the contributor. The employer will put it into box 46 of your T4. Now, should something happen that, and this is where you need to use some due diligence, should something happen that for example, the United Way sends you a contribution receipt for $52 for the year and your T4 says that you took $2 off every 2 weeks and had $52 deducted, if you never made any other contributions to the United Way, then at that point in time you do need to understand that one of them is double deducted and you cannot claim the one. Okay, as you can see, again, your last pay stubs of the year are very, very important for us as tax preparers to make sure that everything is deductible and everything there isn't. Having said that, while you have many choices when it comes to having your taxes filed, either by yourself, online, or going and seeing a tax preparer, make sure that you're using somebody who's qualified. If they're not asking you for your pay stubs, they're not looking to make sure everything's being deducted. And the free or the next to free filing that you may have in order to try to save the $65 it'll cost you to get us to do your tax return may end up costing you a lot more than that in tax benefits. So other than that, for today on the deductions on payroll, that's it. I'm going to invite you guys to tune in tomorrow where we're going to discuss what deductions are not deductible from your pay stubs and explain to you why. Once again, thanks for tuning in and we'll see you next time.